Hope everyone had a good Monday. We're going to be in the middle of the week before you know it. It's nice to see John Najarian back yesterday from his trip to Europe, where he said that Europeans were not as worried about what's going on as we are here in the US about Europe, and they live there. That's very encouraging. We're feeling very good this morning as our Banco Santander dividend hit our accounts this morning with their big, juicy 9% dividend. We are handed quite a bit of shares of this Spanish bank as we like to reinvest our dividends, and it's working very well so far. Next on the list is DBO. This is the Invesco PowerShares Oil ETF. Oil has just been hammered. While yesterday was probably the best day to get long, we don't think that today is a bad day to get long oil via DBO either. Just be prepared to add to your position should selling resume, as we find it really hard to imagine the price of oil going much farther down than $65 a barrel. If you can't stand the fact that you missed your shot at DBO below $25 yesterday, go ahead and put in a limit order now to buy DBO for $24.78. And if we get a little sell-off, you'll grab some. We'd rather see you initiate a good size of your position, 50 to 60% today, and then add if it goes lower. You need to look to take some off at 25% higher from here, about $29.82 or so. If you get really frisky, you can short this top of the range. Just be sure to get a long call at the strike where you sold DBO short to hedge, unless you're a glutton for punishment, or at least just risk. Finally, we can't help but highlight the XHB as a great way to play the return of the housing industry. It includes everything from Owens Corning to Pulte Group to Bed Bath & Beyond. This ETF has only 25 holdings plus a little cash, so it's not overly diversified. It includes the retailers like Home Depot, Lowe's, Aaron's, Pier 1, Williams-Sonoma, and Home Depot. These are clearly home focused. It includes basic home materials like USG, Owens Corning, Sherwin-Williams, and Mohawk that make the walls, carpet, and paint that go into your home. Lowe's and Home Depot is a great way to play all the electrical, lumber, and everything else to go into the home, as well as those who are resigned to stay in their homes and will spend good money to make the home better since they're stuck in it. Of course, it does include the home builders like Pulte, Ryland, Toll Brothers, and Lennar. This ETF is a great way to own the whole sector and has pulled back nicely from the recent highs of around $20. It's nice to see Bill Gates adding to his BP position. We know that Steve Grasso has also been buying BP, and we can't wait to get that massive 7.2% dividend from BP here shortly. The stock is so very attractive at $46, and we have been hearing from all kinds of people that BP is going to go to zero and be broken up. Well, for starters, the headquarters for BP is in London, and we don't think Europe is going to be destroying any companies the way the US is trying to. They have enough issues in Europe without creating them like we are over here. Second, this company has $6.84 billion in cash on the balance sheet and $29.8 billion in operating cash flow. So it should be able to absorb this loss and keep on ticking. As long as the dividend gets paid, we think investors will stick with this well-positioned, super major integrated oil play. At some point, especially with progress being made with the oil slick, that everything will be priced in. Speaking of big, international oil companies that are very attractively priced after this slide in oil, take a look at Total, symbol TOT. That's the French oil company with a 6.4% dividend. The integrated oils are really attractive right now thanks to a market sell-off and a decline in oil prices. Check out some of these very attractive, juicy, big yielders today. Thanks again for joining us. Don't forget to comment about social commentary. So we threw in some here today at the beginning of the show, but you're supposed to leave comments on our videos that we did yesterday, where Brad asked for comments about our use of options, our use of social commentary, also called color commentary at the beginning of the show. So we want to bring you exactly what you would like to hear. Thank you for watching the video. We can track that, no problem, but we need you to leave comments. You can do it. It only takes a minute to leave your opinion, and we do care. We're working on MDRX for a viewer. Right now, the PE is a little rich for us, and it competes with Express Scripts, symbol ESRX, which has a better peg of 1.06 versus 1.71 for MDRX, and better forward P, only 16 versus 26.33 for MDRX. So I think we just answered that for you. Sorry, we like ESRX over MDRX. Wait for a little bit of a pullback though. ESRX is at its 52-week high, and there's no reason to pay up for a stock in this market when another decline is probably right around the corner. Thanks for tuning in and have a great day.